Now I'm going to answer part B, which reads, Grace Nene is a sole trader. The following statement of financial position was extracted from her books as at 30th April 2020. So we have that is a balance sheet. There is a balance sheet, and the last item in that balance sheet, you can see there is a suspense account. Suspense account. Now that tells you that there could have been errors that led to the balance sheet not to agree. This balance sheet is not in agreement, because we know that based on the accounting equation, assets should always equal liabilities and capital. That was not the case for this company, because the debit side of this balance sheet is greater than the credit side by 200,000 shillings, which is reflected in the suspense account. So that is always what happens when you prepare the financial statements and they are not in agreement. You force them to agree by introducing a suspense account, which is a balancing figure on the balance sheet. Then later on, you carry out investigations to find out why the balance sheet is not in agreement, or why the trial balance is not in agreement. And therefore, reading the information provided below this balance sheet, you can see, says that the following errors were later discovered. The following errors were later discovered. Error number 1, a debit balance of 800,000 shillings for Jack was omitted from the list of accounts receivable. 2, an entry of 200,000 shillings return outwards was made in error in the sales book instead of purchases return book. 3, purchases day book had been undercast by 1.6 million. 4, fixtures and fittings costing 12 million had been debited to repairs accounts. 5, depreciation on fixtures and fittings is to be provided for at the rate of 15% per annum on cost. 6, bad debts of 500,000 shillings should have been written off but was not done. 7, a check of 500,000 paid to Arnold, a creditor, was correctly entered in the cash book but credited to his account. 8, goods worth 4 million were taken by Grace Nene for her personal use but no entry has been made in the books. 9, 18,000 shillings discount received had been correctly entered in the cash book but had been posted to the wrong side of the account. Discount received, the wrong side of the discount received account. So these are the errors that were later discovered. Then required one, journal entries to record the errors. Narrations are required, 8 marks. Roman 2, statement of adjusted profit for the period ended 30th of April 2020, 4 marks. Then lastly, adjusted statement of financial position as at 30th April 2020, 4 marks. So learners, it seems the trial balance that was extracted from the ledgers of Grace Nene did not agree, and therefore a suspense account is introduced with the credit balance. That's why it appears on the credit side of the balance sheet. Now, ordinarily, when a trial balance is not in agreement, a suspense account has to be introduced. Then investigations are carried out to discover the cause of the disagreement in the trial balance. That was done, and the 9 errors were discovered. So the question is, what happens when the errors are discovered? When the errors are discovered, then the errors have to be documented in a journal, what we call the journal proper. So the journal proper is a book that is, among other uses, that is used to do what? To correct errors. That's why candidates were required to do what? Were required to prepare journal entries. These journal entries must be documented in the journal proper or the general journal. So part 2B, Roman 1, we are going to prepare the general journal, which is also known as the journal proper. It is a journal. It is a day book. It's a diary that, among other things, is used to record correct errors. Okay? And here candidates were required to do what? Were required to provide the narration. So a journal has two sides, the debit side and the credit side. Then here, particulars or details. The amounts will be shown in thousands. The journal proper. So the first error, a debit balance of 800,000 shillings for Jack was omitted from the list of accounts receivable. It was done what? It was omitted from the list of accounts receivable. It was omitted from the list of accounts receivable. I want you to note that. It was omitted from the list of accounts receivable. That is a single entry error. That tells you that the error was only made in one account. And we know when preparing records according to the double entry system, every debit entry must have a corresponding credit entry. Here we read, it was omitted from the list of accounts receivable. So there was an omission in only one account, single entry. So it's important to first of all understand the nature of the error. Then we move on to correct the error. So the error, candidates, an entry must be effected in two accounts. So you read here it was omitted from the list of accounts receivable. It is this accounts receivable that an error was made, but the corresponding entry was done. So when selling, we credit the sales account and debit the accounts receivable account. So this was correctly entered, but there was an omission in one account. Now, where there is an omission in one account, or where an error only affects one account, you have to correct the error by introducing the suspense account. So there will be two accounts that will be affected, the accounts receivable account and the suspense account. So we have the accounts receivable or debtors, which will be debited. So we are going to debit. The amount is 800,000. Then we credit suspense account 800. Do you understand? I want to repeat an important point. When do you introduce suspense account? A suspense account, you introduce it in the general journal where an error affects only one account. But where an error affects two accounts, then the correction does not require entries to be made in the suspense account. The question here read that candidates were to do what? To provide narration. So the narration here is to correct error of single entry. That is the narration to correct error of single entry.